Everything's showing an uptrend. Do we think NIO's going to do well in the long run? Probably, but that doesn't mean you just pay whatever price for it.
They're delivering cars.
They don't have cash flow.
They don't have cash flow.
It's a very big disconnect. All right, guys, NIO, big electric vehicle manufacturer in China. Is it the largest in China? Or is BYD? I don't know. But
I don't know.
Mo, you have some data on NIO right now. But before we get to that, if you're new to the channel, we take a value approach to investing. If you look at our past videos on NIO, we were ignoring NIO and we were telling people that it was very scary as this chart was looking like this. Go back to early 2021. People were calling us stupid and moronic. Well, the all-time high was $67. The 52-week low is $8.38, and it's currently at $11.27.
Solid.
In the short run, stocks are a voting machine. The votes were good here, and now they're bad here. But in the long run, it's going to be a weighing machine. What's behind the company? So, do we think NIO's going to do well in the long run? Probably, but that doesn't mean you just pay whatever price for it. Mo, tell us some stats on NIO.
So in 2022, they delivered about 122,500 cars. That's 34% increase year over year. And their total is at about 289,500 cars total that they've delivered.
Oh, so they did about 40% of their deliveries all in 2022.
All in 2022. Okay. So yeah, I mean, they're delivering cars.
And they delivered... And good news is they delivered 40,000 cars in the final quarter,
yep,
which would be okay.
So that's good. Even with all that China lockdown that was going on.
Okay.
So that's good.
And they delivered 15,800. So here's the deal. 122,000 all of last year, 40,000 in the final quarter, which would be a pace for 160,000 for the year, and 15,000 in the final month, which would be on pace for 180,000 for the year. So everything's showing an uptrend here. Everything's showing an uptrend. All great data. Now, the thing I want you guys to be different on. Most people hear that and go, I got to own NIO. It's growing like crazy. Well, I pump the brakes there. If that's the case, then no price should matter for NIO. Just buy the stock. It doesn't matter. If you think that, I encourage you to remember that when you buy a stock, you're buying a piece of a business. And it's funny to me because I know a very successful business person who loves Tesla, but when he looks at an individual company that's not publicly traded, he wants to see the financials. But then when he looks at Tesla, he's like, look at the stock. It's a very big disconnect.
So I think this is another really important thing. They're talking about how many charging stations they've deployed. This is one of the biggest problems that I see with companies like Lucid, Rivian, not basically anything that's not Tesla, is you don't have places to charge. And they are proving that they are putting places out there to charge where people can actually take their cars and go on road trips.
Oh, okay.
I mean, that's how are you supposed to, if you can't fill your car up, where are you supposed to go? It's a basic commuter car.
Yeah.
It's a good.
By the way, speaking of China, did you see for the first time in like 60 years, the population went down last year?
Yeah. First time since
850,000.
Yeah.
That's incredible.
Yep.
That's incredible. Okay. So let's take a look at it. Let's look at the 8 pillars of the stock.
And speaking of EVs, 10% of all cars sold in 2022 were EVs.
Yeah, I saw that. Mm-hmm. Oh, guys, this is bad. Look at all this. Now, cash flow grew. Doesn't mean it was positive. It just means they made less losses and revenue grew. Yeah, so guys, with companies that are growing like crazy, this is standard. This doesn't worry me so much. I just look at it and go, hey, it's useless for me to look at this. But here's a data point I want to point out. Let's look at the metrics page here. The price to sales ratio of 3 and the gross margin of 14.4. Okay, so why do I bring this up? Well, let's compare it to another car company. Let's pull up our friends let's pick a good car company. Toyota Motor Company. Their gross margin is 17%. So higher than our friends at NIO.
Yep.
Look at their price to sales ratio, 0.73 versus 2.97?
Yep.
So 1/4. Now, should NIO get a higher price to sales ratio because they have more growth potential? Absolutely. 4x?
Yeah, I don't know about that.
I don't know. Market cap on Toyota is $192 billion. How many cars did Toyota sell last year?
Let's check. But the market cap on NIO is about $19 billion.
That's what I was pulling up next. Yeah, $19 billion market cap. So Toyota, I think they sell like 8 million cars a year. What did you type in?
Let me just go to their...
How many cars did Toyota sell in 2022? Fourth quarter sales were 536,000. So let's extrapolate that out and call it 2 million.
Wow.
Right?
Yeah.
So it's a big number. It's like 16 times more than the NIO. Okay. Again, we don't know. The hard part about what you look at with companies like NIO and things like that is, what do you pay as a good price? I don't have a clue because we don't know what a reasonable price to sales ratio is because we can't run a cash flow analysis. Why? They don't have cash flow.
They don't have cash flow.
over the last, I think they just started making cash flow. No, they didn't.
No, they did
They
not.
did. They had 1 year of it right here. Negative, 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 positive, negative. The average losing $825 million a year in cash flow. Does that mean you should avoid it? No, not necessarily. I buy non-cash flowing assets all the time. When I buy real estate, I tend to buy real estate that can't justify its cash flow because I have to put a lot of money into it or it's pretty vacant. But I still buy it because I can get a good return on my money by covering those losses and turning it around. But with NIO, at 3 times sales, when by the way, Ford, Honda, all those car companies in general are closer to 0.5 times sales. Man, I don't know. It's just a hard pill for me to swallow. Even running our stock analyzer tool would be very difficult.
It's going to be all speculation.
Yes. Now look at analyst estimates. Analysts still don't see it making money for the next 3 or 4 years, and they're trying to be positive on the company. And look at their revenue growth. Now this is not in US dollars. This is in the Chinese currency. But look at this massive revenue growth, and they're still not expected to make money per share. I don't know, guys. This is a very, very tough one. And you might sit there and say, well, come on, there's got to be some price to pay. Yeah, you're right. There is some price to pay. I just don't know what it is. Why? Because there's no understanding of where the company is currently in terms of profitability. Gross margin only 14.5%. Now, as part of your research, you should go find out, are they working on doing things that will make that gross margin increase? I don't know, but how much better it can be? Tesla's killing it at 27% or some absurd number like that. Can they do that number? I don't know. Tesla, I'm sure the average NIO car isn't as expensive as the average Tesla car because it's China. It's a different market.
Right.
And as they grow and grow and grow, they have to have a more reasonable price point, even if they are expensive. That's what we say about Tesla. Tesla has expensive cars now, but in order to be the number one manufacturer in the world, they got to sell about the average car price at some point. Look at Ferrari. Their average car price is $320,000. That's why they only sell 11, 12,000 cars a year. You can't sell 10 million $320,000 cars. So where do we stand here using our software? Unfortunately, it's a purely speculative play. Doesn't mean you can't run some sort of analysis, but you got to do deep research into what they're expected to do in the next 5 years and put a very big margin of safety, not just a normal one. This is a long-term play. Let's actually do it right here. You know what? I'm going to use Stock Analyzer tool. I'm going to go 20 years, Mo.
Okay. It's looking like their average car price is in the mid 60s.
So that's not going to be sustainable.
Yeah, not at all.
So let's go revenue growth the next 20 years.
Okay.
I'm going to go with 8, 12, and 16%.
Wow.
Profit margin. I'm going to go with 3, 5, and 7. Free cash flow margin. I'm going to do the exact same thing. Because remember, their gross margin is 14.5%. It's hard. Then that's before all taxes, all income taxes, and before all overhead. This car business is a very, very expensive business to be in. PE. I'm going to go 15, 16.5, 18. 15, 16.5, 18. And before I hit and then my desired return, because first off, here's why I have to have a really high margin of safety. This model assumes they're profitable day one, today, and they're not going to be. So I have to put an even higher margin of safety in there.
Analysts, the cheerleaders, don't even think they're going to be profitable in a couple of years.
So I'm actually going to put 16, 20, and 24%.
Fair.
So remember, guys.
Make the juice worth the squeeze.
Remember, this model assumes profit day one. We're not going to have that. So I have to put a much higher margin of safety in there. So let's see where it comes out at. All right, it's $11. I have a low price of $1.60, a high price of $4, mid price of $3. And you might be sitting there saying, oh my God, that's absurd. Well, it was $66 just 2 years ago. And people probably thought we were absurd for saying whatever price we said back then.
Yeah.
But I really think to myself, for me personally, maybe I'm paying attention around the $3 mark. I don't know. But even then, if I don't understand it, I'm not going to buy it.
And this hit a 52-week low of $8.38. So it's not totally unreasonable.
What's the, oh yeah, exactly.
38 cents.
Yeah. So
very unreasonable.
So if things get better for the company and the stock falls, might be an opportunity, but don't rush to it. Be patient. That's the way to be in investing. So guys, our stock analyzer tool used over 1.3 million times in the last year by our users. Very useful. Check out everythingmoney.com. We have a money back, no risk guarantee on our software. It's less than a cup of coffee per day. Thank you very much for your time.